Hello everyone, today we're going to be talking about Michael Saylo, who is going to tell us all about why Bitcoin is the only thing you should invest in. Just be aware, he's a major investor in Bitcoin. And no, it is not a Ponzi scheme. So let's have a watch, see what he has to say for himself.
Then it's getting scrubbed out and banned. And of course, we now know that it's not getting banned. There's no way that Fidelity, Citadel, BlackRock, Charles Schwab, Deutsche Bank, Credit Agricole, Banco Santander all decide they're interested in this, right? They're not in.
They don't know it's not going to get banned. Just be aware of that. They're hedging like they would for any commodity. They will hedge. This doesn't mean that it will be $1 million just because it won't be zero. That's nonsense. They're hedging. They're taking a tiny little bet in it. But it could be banned any moment by anyone, and that would have a huge effect on the value.
Endorsing a tulip bulb. So once you go from 0 to 1, then the question is, okay, well, it's an asset class. If it's not going away, then what's it worth? Well, it's worth 1% of the assets in the world. So
where'd that number come from? 1% of the assets in the world? I don't know where that number came from. I mean, it looks good on paper, sounds very authoritatively stated. No evidence to support that position at all.
1% drives it up by a factor of 10 to 20 once you get to a 1% exposure. So the recognition as an asset class is a big deal. The availability of a spot ETF is a big deal. The normalization of accounting via fair value accounting, which is the FASB initiative, is another big deal. Wall Street and the general community is kind of just internalizing this all in a short period of time, and that's why the bullish outlook. So you're a normal person.
Or it's not a bullish outlook, it's simply a huge bubble caused by a whole bunch of people like, let's say Michael Saylo here, telling you to buy it and producing an enormous bubble. In fact, one could almost call it a Ponzi scheme. But let's hear what else he has to say. I'm really interested in his backing up of his position here. See if it makes any sense, logical sense at all.
And you want to save money for retirement or to give to your kids. So you put it in a savings account, you get 5% interest. The monetary inflation rate is 7 or 8 or 9%.
No, it isn't. I don't know where that number comes from. That's a lie.
Got a negative real yield of 3%. If you end up with a negative real yield of 3.5%, then over 100 years, $1 million saved is worth $30,000.
Inflation, I will completely accept, is a real thing, but I don't know where he got this number from. There's no example in history of that being true. So, again, sounds really authoritative, but there's no data to support. It's just a bloke talking. I guess a bit like me, but maybe I'll shove some graphs on screen to show you what $1 million 100 years ago would be worth today in real money. If history can be any guide, he seems to think it can be. So let's make it a guide and let's look at the last 100 years. And
so for the average person, saving money in bonds with a 3.5% or 4% interest rate when the currency expands at 7 or 8, that's a losing proposition. You lose 97% of your wealth over the course of 3 generations. So clearly bonds, they don't work, and savings accounts don't work. So the next question is, do I just put all my excess money in the S&P index? Well, traditionally, the money supply in the U.S. is expanding at 7%, and the S&P index is going up at 7%. So if you save $1 million over the course of your life and you put it all in the S&P index, then in 100 years, it'll be worth $1 million.
How many people are saving things in an account for 100 years? I mean, I might be old, but I don't think I'm going to make 100, and I didn't start saving at the year 0. So it doesn't make any sense. Again, let's have a look at what would have happened if you'd put your money in the NASDAQ 50 years ago, or the S&P or the NYSE 100 years ago, or the FTSE 100 years ago. Let's see where your money would be now. If he wants to use that as an example, historical precedent, and I don't know where else you would look. So don't believe him.
So that's wealth preservation, but you're not doing any better than that, and that just kind of assumes that the S&P 500 is going to be relevant for 100 years, and you can stick around the country. But it's like treading water. The next issue is what I put in real estate. If you buy real estate, you're an average person. Can you buy a building? Probably not. Can you buy a warehouse? Not easy. Maybe if you're a rich family, you buy warehouses, right? Rich families buy warehouses, city blocks, and buildings, but the middle class person doesn't.
Lucky them, because with occupation rates of about 50% of all the major markets, you really don't want to be in business real estate at the time of recording, 2025.
So how do you buy $4,000 worth of a building? Can't. Okay. So the issue there is...
You kind of can, actually. It's called an index fund. You can buy an index fund that indexes property. You could do that, put $4,000 in it if you wanted to. Probably not worth it because of the fees, but it could be done if you've got more money than that. So that's not true.
Your property rights are inferior when you're buying shares of stock or a security versus the underlying property. If you own the building...
No, they're not. The risk is lower because if you bought your warehouse in Florida and Florida goes underwater in the next 20 years, you're screwed. Bought an index fund, well, it would be across hundreds of properties, maybe millions of properties across the country or the world if you wanted to. So, no, not true.
You can mortgage the building, sell the building, upgrade the building, build 10 floors above the parking lot that the building has. You can develop the building. When you own a share in a REIT that owns the building, like you own 1/100th of the building, you don't have any of those rights. You can't do anything to the building. You're just along for the ride, getting 1/100th of whatever cash flow the general partner decides to distribute to you.
I agree with that. But if you're going out there buying 100th of a building and just letting somebody else make all the decisions on it, you are almost as crazy as you are investing in Bitcoin. But let's carry on. This isn't the thing that most people would do. And he's right to say you'll be mad to do it.
And if they make stupid decisions, you're stuck with them. You don't have any property rights. You're inferior in your economic rights. So owning shares of a REIT to get property for 100 years, not a great idea. And that leads us to the problem of securities. What is the problem of security? So you have some money, you invest it in Apple stock or Amazon or Facebook or Google or a REIT that owns a building. The diluted problem with securities is there are risk factors. First of all, there's a management team. They're going to take 1% every year. They're not doing it for free. They're charging you to manage the company or the building, right? And if you're lucky, that's only 1%.
Actually, what most sensible investors do is don't invest in individual stocks. They would invest in index funds, much less risk, and only active managers would charge you something like 1%. I mean, you go to Fidelity or any of the others, and you would get a much lower management cost than that because they're buying indexes funds. They're not buying individual stocks. Individual stocks are a great idea if you've got a lot of money and you're prepared to lose it because you're prepared to risk some of it for a higher reward. But normal investors shouldn't be buying individual stocks. It's far too risky.
You want to see that in action? Just go look at any ETF. The ETFs charge 90 basis points. If you want to put money into Bitcoin, Beto, or whatever, they'll charge you 90 basis points just as the management fee. So about 1%. What's the cost of 1% over the course of a lifetime? An infinite duration asset, you would basically multiply it by 20, 25. So it means that when I charge you 1% to manage your $1 million, I'm taking 20% of your money. I'm taking 20% of all your wealth to charge you 1%. So that's only the first problem. It turns out that when you run a company, you also have the risk of labor. Your company may unionize. So you've got labor expenses. And what happens to the equity value when the company unionizes? Well, the union just takes all the profits.
That's a nonsense statement. Well, every company that has a union, immediately all the profits just go to zero and they collapse. Could you give me a couple of examples of that? Could you give me 50 of the thousands of companies that have got unions? It's just scaremongering. It's nonsense.
And the equity values of those companies start to trend towards zero. So labor is another risk. The third risk is your competitors, right? Your competitor may come up with a better product and you end up like Yahoo squeezed out or AOL squeezed out by Google.
This is exactly why you don't invest in individual stocks, because the risk is too high. So you do it on, let's say, the NASDAQ, so that you You may lose on Yahoo, but you'd win on Google. That's why you do not buy individual stocks.
Well, then your stock's going to zero. How many companies actually had a competitor? Xerox, Kodak? World's full of great companies. Where are they today? They end up getting squeezed by competition. The fourth issue is technology. You may just get obsolesced, right? Maybe you own natural gas fields or oil fields and someone creates nuclear power plants and they don't need your oil anymore. Or maybe you sell the world's greatest chemical cameras and people don't need cameras anymore. They have digital cameras. There's always that kind of risk from technology. And then there's execution. Maybe you just don't ship the iPhone 47 to be that good, right? Maybe the iPhone 13 is good and the iPhone 15.
So he's basically implying you have to buy individual stocks. That's the only way to play this game, and you must never sell them if you see there's a problem coming. Right. This just sounds like a guy trying to sell me Bitcoin.
15 is not good, right? And the world's full of examples of that, like Firestone tires or something, and I ship a tire and the tire blows out, and now people stop buying my tire. Or New Coke. Remember New Coke is a product launch? That didn't work out well. When you're investing in a...
Yeah, but Coke did. Did you notice Coke did pretty damn well? I wouldn't mind a couple of bits of Coke stock from 100 years ago. I think I'd be quite wealthy by now. Bad example, Mr. Saylor.
Company, you're not just getting a pure investment. You're actually getting an investment in an asset, but you're getting hammered and diluted by force majeure, by bad weather. You might get a war. You might get a tariff or a trade war. Like we just decided to put a tariff of 20% on all Chinese imports. Oops. If you had a factory in China, what happened there? And then maybe get a real war where someone just impounds your ship or blows up your factory. That happens too. We have real wars all the time. So what's the return on the S&P index? 7% a year. What's the monetary inflation rate? 7%.
But the reason it's 7% a year, it doesn't mean inflation's 7% a year. The amount of money in circulation goes up as the economy gets larger. So, nonsensical.
What's really happening? Well, all these companies, they're just barely holding their wealth. And so what would happen if I got rid of all those risks? What if I could buy a product that was never going to obsolesce, that's good for 1,000,000 years?
There's absolutely no evidence to support this position. How can he possibly state that it will have a value for 1,000,000 years? It's rubbish. You can't even guarantee it'll have a value next week. The value of something is how much somebody else is prepared to pay for it, not how much of it there is. The first law of economics. Things are worth exactly, no more, no less, what somebody else is prepared to pay for it. It's not about how much of it there is. It's about how important or valuable somebody else perceives it to be.
What if there was no management team and they worked for free, right? What if the product is run by computer programs that don't charge a fee? What if there's no labor? What if it's a digital product, so there is no chance to block it via a trade war or destroy it via a real war? What if it was an indestructible, immortal, incorruptible product? When you buy a Bitcoin, you're buying 1/21 millionth of all the money on the network, or all the money in the world that's ever going to be on that network. Okay, so would you want to own 1/21 millionth of all the money in the world?
But hang on. So you've just equated 121 millionth of all the Bitcoin, if you owned one Bitcoin, although that's actually really a lot of money these days, but because of the Ponzi scheme. But now you're equating it that 1/21 millionth is all the money in the world. That's a leap that I didn't see you prove any evidence for.
In 10 years, 20 years, 100 years, 1,000 years, 10,000 years. The product's not obsolescing. It's 1/21 millionth of everything, you see.
No, it's not. It's 1/21 millionth of Bitcoin. That's not the same thing. But it's interesting how you went from equating Bitcoin to suddenly Bitcoin is everything. At the beginning of the video yourself, you said it was nothing or everything. I don't see why that's so binary. Bring evidence.
The iPhone will obsolesce. One day you'll be using Apple Vision, or maybe they'll put a telepathic implant in your brain and you won't need phones and you won't need goggles. And maybe you won't need televisions. Those things can obsolesce. But will you want 1/21 millionth of all the energy in the human race?
Okay, so now you've moved from it's all of money to all of energy. It sounds like you're going down the rabbit hole of this is pseudo-physics, isn't it? You're going down the hole of pseudo-physics. I think this is going to be mental.
Probably. Like the whole point of pure energy, right? Einstein said energy can neither be destroyed nor created. You can just transform it. It's a pure idea. It's an idea that doesn't have competition.
How many different cryptocurrencies are there? So even if you believed in cryptocurrency, which plainly I do not, but if you did, it's got plenty of Bitcoin's got plenty of competition. That's a stupid statement. And now you're using pseudoscience. I knew you'd go that way. So it's Einstein, so it must be genius. What? No.
Because of the Immaculate Conception. There's one bit.
Immaculate Conception. Now you're bringing religion into it. I tell you what, you couldn't make this up. This is Barnum's Circus. This is. Talk about over-egging it.
Coin. There's one network that was created by a nameless, anonymous figure, Satoshi, and Satoshi gifted 1 million coins to the universe, never ran an ICO, never kept anything from a pre-mine, and the network now is just owned by the people. So how do you...
It's actually owned mainly, by the sounds of it, by the banks, from what you said earlier, not by the people. So, no.
Actually compete with that. It's hard to see how you compete with a pure thing like that. So it's a digital monopoly with no labor.
It's not a monopoly. We've already discussed there's dozens of other Bitcoin or crypto coins. And it's not a monopoly because there's plenty of other things, which if you really want to be talk about scarce, well, art, classic cars, Banksy stuff. There's plenty of things that are unique. Oh, NFTs. Anyone make any money out of NFTs? Hello? Bueller? Yeah, I thought not.
Risk, no war risk, no product risk, no execution risk. Now, there is execution risk that takes place. So you have to set up Bitcoin miners.
Which costs a fortune, by the way. So that's money that you didn't spend on something else.
And if you set up a Bitcoin miner in China and they shut down Bitcoin mining, the miners lose money, but you don't lose money as the holder. It's like the perfect monetary franchise.
No, because where do you get the Bitcoin? If you didn't mine it yourself, which I certainly wouldn't recommend anyone watching this do, but if you didn't mine it yourself, you bought it from someone. So it's not as if you suddenly gifted it.
All of the work to improve Bitcoin is done by the miners, by the Bitcoin device builders, by the Bitcoin banks. You know, BlockFi and Celsius can fail, but if you're holding Bitcoin in cold storage, you don't fail. The hardware company can fail, but you don't fail. And so if you study business, let's take McDonald's. McDonald's is a great business, but the reason they're a great business is so they don't really take that much risk. All the franchises take the risk. And so it's possible for every restaurant to lose money in the McDonald's chain, and the McDonald's Corporation still makes money.
Well, not for long, because people won't then buy more franchises, will they, if everyone's losing money? So, terrible analogy.
Because they've laid off that risk downstream. Other people risk their capital. So Bitcoin is kind of like this.
As do everyone who's buying Bitcoin. They're risking their capital because they're turning dollars, or euros or pounds or yen or whatever into Bitcoin. So if the Bitcoin collapses against the dollar or any of those other currencies, then they are making a risk. It's a stupid statement.
Viral, ultimate banking monetary franchise where banks will take risk, miners will take risk, individuals will take risk, companies will take risk. When the risks pay off, the Bitcoin holders benefit. And when the risks don't pay off, the people that took the risk pay the price, but Bitcoin just continues. It's very...
Well, Bitcoin might, but let's say you spent $100,000 and bought yourself one Bitcoin, just for argument's sake, and then the market collapses and it's worth, whatever, $10. Well, you've just lost $99,990, so you are taking a risk.
Anti-fragile. So coming back to your question, right, how's the middle-class family benefit from this? Well, Bitcoin represents pure digital property, global property. It doesn't have the dilutive elements of a security. It doesn't have the dilutive elements of a currency or a credit instrument or debt instrument. It doesn't have the dilutive elements of property. You want to buy a second apartment in Airbnb? Okay, well, fine. Someone may move into it and trash it. You may have a renter.
Diluted risk.
You may get rent controlled by the city. You may actually have a tornado hit it and trash it. You'll probably get a property tax on it from the city, maybe from the county, maybe from the state, maybe from the...
By the way, you probably will get a property tax, but most of those property taxes are tax deductible. How tax deductible is your Bitcoin? Hello?
government. If you ever have to leave, you can't take it with you. And at some point in 100 years, the thing is probably going to have to be completely rebuilt and renovated to be usable again.
True, but I can live in that house for the next 100 years or however long I survive. I'm going to really struggle living in that Bitcoin wallet, aren't I?
So property's not a great long-term store of value. Credit's not a great long-term store of value. They're not scalable. You can't buy $437 of an Airbnb apartment every 2 weeks. So Bitcoin offers you apex global property. Theoretically, you know, if the S&P index yields 7%, there's no reason why Bitcoin shouldn't appreciate about 14% in that environment. I think you get about a 7% real yield over the course of 100.
Where's that number come from? Show you're working, son. A lot of flashy graphics on this ridiculous video, but oh well, if the S&P's 7%, then Bitcoin will be 14. Really? Where'd you get that number from? Sounds like you made it up.
Years, whereas S&P index gives you 0% real yield. The best you can theoretically do with real estate property is maybe a 2% real yield if you're just really good at it. But there are just so many risks. You know, will your grandson or granddaughter be able to run the family property portfolio no matter what country they live in? And are you sure that any of 10,000 politicians aren't going to pass a law to destroy your property value?
Or get rid of Bitcoin. Just exclude it from their financial system, which most countries would like to do, because remember, most countries denominate their debt, the big countries denominate their debt in their own currency. Or use the reserve currency, obviously the US dollar, or a bit of both perhaps. But the major economies, therefore, want something that if push comes to shove, they can devalue. So they're not going to want Bitcoin, because if you can't devalue it, then they don't have any control over it, which is a really good reason for them to then ban it.
Values sometime in the next 100 years. Think back from 1900 to the year 2000, and now imagine that you own a bar of gold in the bank in your city. What's the likelihood that you still have it 100 years later? Imagine you have a building in a major city in the world. Imagine you still have it 100 years later. Would you want to own a building in Russia, in Moscow, in Kiev, in Tokyo, in London, in Paris, in New York? Where would you want to own the building? Where would you want to own the bar of gold? It turns out that everywhere in the world, the gold got seized. Maybe you might have got by in Zurich, Switzerland, but everywhere else you lost all your money.
No, you didn't. Where did it get seized in New York or London or Paris or Frankfurt? I'm not even certain I know where it got. I mean, apart from maybe when the Nazis and the Russians came through Europe, sure, but most of that gold was already in Switzerland. I mean, that's why the Nazis didn't invade Switzerland, because they got to put all their wealth somewhere.
Every bank failed. Every currency failed. So your best bet is...
No, it didn't. Over the last 100 years, I could think of a dozen economies, or probably 3 dozen actually, economies and societies that didn't fail over the last 100 years. So, no.
Maybe you own property that they can't make more of. If you're lucky enough to own... If you owned a piece of property on the Gold Coast of Florida for 100 years... it went from $100,000 to $50 million.
But it went up by $100,000 to $50 million for numerous reasons. It wasn't simply that piece of property became more valuable. Imagine living in Florida without air conditioning. Yeah, I think that $50 million house would be worth about $100,000 if you have to live in 100-degree temperatures with 100% humidity. So... meaningless, absolutely meaningless. Technology allowed Florida to become livable, and in fact all of the south of the US and many, many other places.
Good, but the property taxes on it probably offset the capital gain from it if it was residential. So
Not really, because they're tax deductible.
The only way you could have actually made money owning property is if you own commercial real estate and you generated a rent on it in excess of the taxes and the insurance and the depreciation and the maintenance. It's not easy to do that everywhere in the world. So Bitcoin represents property rights, or the right to purchase perfect property that is maintainable. It's low cost to maintain. It's indestructible. The rain doesn't melt it. Tornadoes don't destroy it. And it's scalable. You can buy it with your weekly paycheck. So it's liquid. You can sell it. Try selling 1/100th of a building. Not so easy.
Yeah, it is easy. You have it in an index fund.
You want to mortgage the building? The building in Kansas City, you could mortgage to a bank that deals in Kansas City real estate. But if you're Turkish and you have a building in Istanbul, there's only just a small number of banks in the world that will give you a mortgage on that. The mortgage will be in lira. The lira is losing 30 to 40% of its value a year. You got a problem.
Actually, if you've got a great big mortgage on it and the value of the currency is dropping by 40% a year, then your mortgage effectively becomes almost meaningless very quickly. Sounds like a great deal to me.
So Bitcoin represents global digital property. You can take it anywhere on Earth. You can hold it for 100 years. In theory, you can hold it for 1,000 years. So you can take a very long view. And how many banks will want your Bitcoin? Well, you see what's going on right now is there's a French bank that wants to custody Bitcoin. There's a German bank that wants to custody Bitcoin. There's a Singapore bank that wants to custody Bitcoin. The banks in the UAE are getting into the business. The banks in Spain are getting into the business. The banks in the US are getting into the business. And on the other hand, none of those banks want to give you a mortgage on your house in Arkansas. Only a local bank in Arkansas is going to get into that, right? So Bitcoin represents a pure economic asset. It doesn't have the liabilities that come with securities and other forms of property and other commodities. And it's simple. And that's why it appeals to the middle class. I don't have a better solution for you if you're a working person on a salary and you want to take control of your own economic destiny.
Do you understand how Bitcoin works? Can you tell me why the value of it would go up or go down? And when people say they work in Bitcoin, can they explain to you, and maybe you can explain to me in the comments, what do you actually do? If what you're doing is working in Bitcoin means looking at your phone every 5 minutes to check if the Bitcoin value has gone up or down, it's not really working in Bitcoin. Now, could it have a long run and go up and up and up for a while because there's more and more people investing in it because they watch videos like this and hear, oh, I better get into Bitcoin or else it'll be $1 bazillion and I'll never be able to afford it. That sounds like a Ponzi scheme to me. Now, I could be wrong, right? It could be the greatest asset bubble in history. And perhaps if you're wealthy enough, it's worth hedging your bets. I mean, they do say any investment person will tell you should have some in stocks and bonds, some in gilts, some in property, some in cash, some in gold. Maybe you should have a little bit in Bitcoin. But the idea that all these others are just going to drop to zero and Bitcoin is going to be the only thing that survives is, I believe, nonsense. I would love to hear a counter opinion, and I'm sure I'm going to get a few in the comments. So tell me why I'm wrong. Let me know if you think that, maybe these people need to bring a bit more evidence when they say things like it's pure energy and it's 1% of all the assets in the world. I mean, it might be, but they haven't proven a case. They've just said some words, and they said them in a very convincing way. And I think it's all nonsense. Prove me wrong.